Hello everybody, with you, Andrew. In this video, we will analyze the second most effective reversal pattern. In the previous video, we analyzed the 3-tap setup, and in this video, we will analyze the 3 drives pattern. If you haven't seen the previous part, be sure to watch it before watching this video. On the chart where the numbers 1, 2, and 3 are shown, the bullish and bearish drives pattern is shown. I'm showing all the examples on one time frame and one range just to show you how often these patterns form on the chart before we like a reversal, and it doesn't matter if it's Bitcoin or any currency pair. What I show here will work in any market at any time. Share this video with your friends. I believe that everyone should know these easy patterns. 3 drives pattern. This is a pattern of 3 movements. Visually, it looks like 3 transitions in the market and then return to the other side. The confirmation of this stage will be the breaking of the structure, and then there will be the best opportunity to enter the position. Let's start with the bullish 3 drives pattern. In this case, there was an aggressive downward movement. After that, the price began to manipulate tallow. The word manipulation means when the price renews the minimum and then is fixed above it. In other words, it takes liquidity and then dissolves. If the price renews the minimum and then is fixed below it, then most likely it will just be a downward trend. It is not necessary to look for this pattern with such a schedule, because the probability of seeing a continuation of the downward trend is very high. And it is also very important to consider the context. A bullish TDP should form in a support zone, and a bearish one in a resistance zone. Divergence will also be a strong additional factor. Better pay attention to this. It will indicate the weakness of the trend. In these 2 examples, there is no significant support area in the bullish pattern and resistance zone in the bearish one. Because I want to show an example that will work in this situation, and then I want to show the example more effectively. And so a correction was formed on the bullish trend, and the price formulated a bullish 3 drives pattern. Bullish because there is a manipulation of tallow. This means that when the highs are manipulated, a bearish pattern is formed. In fact, the price has not tested any support area, so there is no reason for an aggressive entry, because the probability of grabbing an unjustified stop will be hung. The price has the possibility to go even lower. Therefore, you should wait for the structure to break and enter based on the Quasimodo pattern. If this video gains maximum activity, then I will make a specific video about this pattern. For this, we stretch FIBO from low to high. We divide it into 2 areas. Discount and premium. In the discount zone, we find the area from which we will enter the position. In this case, the support zone will be the order block with imbalance. The imbalance was blocked here. After that, the rally started. For an ideal entry, as I already said, we expect a break in the structure and look for an area on younger time frames. If you watched my previous video, you will have no problem finding this area. My entry point would be on the imbalance overlap. The stop would be at the 3rd level. The ratio of risk and profit is 1:3. Super deal, but I try to enter a deal with more potential, but already on younger time frames. But don't think that we can only work on this setup. It may not exist. Just work the structure and look for positions from significant support areas if the scenario is bullish. Now let's look at the bearish eerie drives pattern, which will be more global. It was formed for almost 2 months, and in the end, we saw an almost perfect performance. Here you can see a similar picture only in the opposite direction. The price manipulates the highs. A priori, there is no resistance zone on the left side because it is the maximum price for all time. Therefore, the use of this pattern will be purely due to breaking the structure. At the stage of the 3rd transfer, you will look at divergences, which will indicate the weakness of the trend. As you can see on the graph, the maximums are higher and higher, and on the indicator they go down. This will be a bearish divergence in a bearish pattern, so the probability of a reversal will be high. Once you have seen the breakout of the structure, you can consider opening positions. In the resistance zone, the price formed a bearish 3-tap setup. After that, the downward trend continued. As you can see, there is a reversal formation on every movement on the chart. If you switch to younger time frames, there will be many times more of them. I believe that they must be found and used for their own purposes. I hope you liked my video. Thank you for attention.